There has been a total trading volume of $16 billion for Ethereum in the last 24 hours. The value of Ethereum has dropped by 45% in the last 24 hours. Bitcoin is currently the second most valuable cryptocurrency, according to CoinMarketCap, with a current market value of $328 billion. With 119 million tokens in circulation, it is the world's largest cryptocurrency. By March 14, 2022, we expect Ethereum's value will rise by 9% to a total of $3,020.15. According to our technical indicators, the current sentiment is neutral. However, the fear and greed index is now showing extreme fear. Ethereum's price volatility increased by 7.22%, and its green days increased by 40% during the last 30 days. A great time to invest in Ethereum, according to our forecasts. As of this writing, Ethereum is trading at $2,569.88, while the typical pivot point is $2,514, $2,442.56, and $2,386.68. Ethereum's resistance levels are $2,514, $2,442.56, and $2,386.68, which is the most difficult to overcome. In a similar vein, Ethereum's resistance levels are $2,641.33, $2,697.21, and $2,768.66. To have a better idea of what Ethereum's price will be like in the future, it's important to study its price history. In the preceding month, the rate of Ethereum to the US dollar dropped by 8.12%. Over the past year, ETH/USD has gained 58.46%. It is probable that some of the recent gains earned in Ethereum may be erased following the latest sell-off, which happened last week. After the price of ETH hit its lowest point in 30 days, which was $2,485, the bears appear to be in complete control of the cryptocurrency. Two things to note: bulls have been unable to hold on to both the 0.5 and the 0.382 monthly Fibonacci retracement levels in their favor. Over the 0.236 Fibonacci retracement line, pricing is currently at $2,583. Unfortunately, the current market does not consider the Fibonacci retracement level of 0.236 to be a strong level of support. The recent Ethereum price movement suggests that the token will need to consolidate more before the bears can fully take the liquidity that has amassed below the last monthly low of $2,300. It looks that, for the time being, there is no hint of Ethereum's price reversing in a positive direction. As the market continues to collapse, bears who profited early from this week's sell-off are likely to adjust their orders into take-profit zones. Because of this, we may expect a lot of sideways movement on the intraday chart between $2,500 and $2,650 over the next several days. Additionally, Ethereum looks to be printing a bullish morning star on the daily chart, which is a favorable signal. This pattern will reinforce the idea that price action is currently constrained to a narrow range. There is a good chance that bears will force the price back down to its monthly low of $2,300, which was hit in February. As soon as a daily close above the 0.5 monthly Fibonacci retracement level, at $2,750 is achieved, the bearish outlook is invalidated. Assuming that the invalidation occurs, the price of Ethereum will rise by 10 to 15%, bringing it back to $2,870 or possibly $3,000. After failing to break out of a 5-week-long downward channel for the third time in a row, Ether is in danger. The March 2nd test of the $3,000 resistance level was followed by a 17.5% loss in 5 days, which indicates that buyers are a little apprehensive to defend the present market level. High network transaction costs are still a problem for Ether, despite a reduction in fees from $19 per transaction in mid-February to $13 currently. The price of $13 per transaction is still too high for most games, non-fungible tokens, and even decentralized financial transactions, despite the decline from previous highs. Even more alarming than Ether's performance is the 55% drop in total value locked, TVL, in Ethereum on March 8. When compared to its competitors, the percentage of assets held in smart contracts has hit an all-time low. Since the beginning of February, Ether's price has been on a decreasing trend. There is no better place to look at how professional traders are positioning themselves than the futures markets. A measure of Ether's futures contract premium, referred to as the basis, may be used to establish whether this current downward trend represents the sentiment of major traders. The reason for this is because fixed calendar futures do not have a funding rate, which implies that their price will fluctuate dramatically from the price of a regular spot exchange. Traders can gauge the market's bullishness by analyzing the cost differences between trading futures versus spot. The 3-month futures contract, on the other hand, tends to trade at a premium of 5% or less on an annualized basis when bearish sentiment is in the air. Rather, a neutral market should show that market participants are reluctant to lock in Ether at a low price before the agreement is finalized at a 5% to 15% basis.